Hi, I'm Steve Garrett, and I'd like to talk to you about one of the great mysteries of financial stewardship for not-for-profit organizations like Rotary. There's this term called 501c3 or 501c4. It's people sort of understand it's a tax status, but they don't really understand too much more than that. I want to clear up, first of all, the 501c3 is a not for profit charitable organization. 501c4 is a not for profit community organization. And what's the difference? Well, they are different in a lot of ways, but let me just make it easy. Okay. Money that you contribute to a 501c3 is to be tax deductible. And the money that you contribute to a 501c4 is generally not tax deductible. But if you happen to be a business and you're paying your dues as a business expense, then it would be tax deductible, but it's not because you're giving it to a 501c4, it's because it's a business expense. Now, the 501c designation, why a 3 and why a 4? Well, actually, there's more than 30 different 501cs. 501cs, they all have their own little sets of rules. There's even a few 501c70, which is only applies to like one organization in the world, but they've got specific rules. A 501c could be a hospital, and it could be an agricultural association. It could be a insurance entity. It can be a school, a college. There's just all kinds of fun. But we're only dealing with Rotary and nonprofit organizations in general, 501c3s and 501c4s. Now, in reality, these account for the vast majority of all the 501c organizations, and they account for a vast majority of all of the money that is invested in and goes through 501c organizations. So we'll just deal with those for a minute. One of the things I want to clarify to start with is this word nonprofit or not for profit. And actually, in the law, many of these organizations are called public benefit corporations, but the IRS calls them not for profit. And there are people who are mistaken to believe that that means that you can't make a profit. It's a tax status that your profits are not taxable as taxable income. It doesn't mean that it's a business plan to not make money. And at one point in my business consulting history, I was paid by a bank to go explain to the board of directors of a not-for-profit that was about ready to go bankrupt, owing the money bank, and they were under the impression they couldn't make a profit. And you know, if you borrow money from a bank and you can't make profit, it's sometimes a little bit hard to pay the money back to the bank, and the bank wasn't real happy with it. Rotary International was originally incorporated as a 501c3, or original status was as a 501c3. But Rotary clubs, which are not the same as Rotary International, Rotary clubs all have a 501c4 from the Internal Revenue Code under what's called a group exemption ruling. And so the group exemption ruling from the Internal Revenue Service actually happens to be number 0573. And Rotaract clubs and Interact clubs come under the same exemptions because they're all part of the group. So we're all the Rotary clubs are 501c4s as a club. Now, you might have noticed that many Rotary clubs are two organizations, sometimes two corporations, and one of them is a 501c3 and one of them is a 501c4. And that's because the 501c4 is a community association, and the money that goes into it is not tax, and the money that goes into it cannot be deducted from taxes unless, of course, it's a business expense or something like that. And a 501c3 qualifies as a not-for-profit public charity, and the money that goes into a 501c3 can be deducted by the donor. So that's a big difference. The IRS goes back to May 13th, 1958. And yes, I was born by then, but I was not a member of Rotary. And it's a 2-page ruling. And it is one that explains all this. Now you think, well, okay, well, this is really neat. We don't have to pay taxes or anything. I guess we don't have to write a tax return. No, it says right there in that letter, that you will be required to file a return every year called a 990. And if a Rotary Club is not filing their 990 every year, they stand to lose their 501c3 and their 501c4 status. So it's amazing. It amazes me at how many Rotary Clubs just don't do that. Just don't file their 990, and then they wind up in a big problem, and they've got to solve that problem. Then there's some other limitations. A 501c4 often will be a politically oriented organization, and that means that they can take political sides and lobby for political things. 501c3s are not supposed to be taking political positions and lobbying for things politically. Doesn't mean they don't. It means that they're not supposed to. Now, if you're a Rotary Club and you're a 501c4, you can take political positions, except it is in a violation of the Rotary International Constitution, bylaws, and your club charter, because we don't do that. Well, I mean, we can have two sides of an issue come in and explain the political ramifications of the issue as a public education fact, but we don't take a side politically. And that because it could jeopardize our status on the 501c3s. So I hope that that provides you a little insight into the 501c status, C3, C4, and it's something to be valued. It's something to consider as an advantage that we like having, and it's not something to be ignored. I'm Steve Garrett. I got some other things to say about this, so thanks for listening to me.